Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain.
One of the most enjoyable and simple ways to earn passive income is through dividend investing. That's why in this video, we'll take a look at 3 different strategies on how you can make your first $1,000 in dividends. I would recommend that you watch the full video to better understand which investment style is best suited for your needs and how to get started on your dividend investing journey. The first way to make your first $1,000 in dividends is by investing in an ETF. This is probably the safest alternative. An ETF, or exchange-traded fund, is a type of investment fund that trades on stock exchanges, similar to individual stocks. ETFs are designed to track the performance of specific indexes or sectors, providing investors with exposure to a wide range of assets in a single investment vehicle. Usually, the ETFs provide a group of stocks. Also, many ETFs offer dividends, and some are even specialized in dividend-paying stocks. ETFs usually offer less risk than, for example, individual stocks, and that's why buying an ETF is the safest option for most people. The most popular dividend-paying ETF with over $40 billion in assets under management is the Vanguard Dividend Appreciation ETF, ticker symbol VIG. The average dividend yield of this ETF as of today is 1.7%. VIG is known for its focus on dividend growth stocks, aiming to provide investors with exposure to companies that have a strong history of increasing dividends over time. The expense ratio of this ETF is 0.06%. The dividends are distributed quarterly. The amount of money you need to invest in VIG to generate $1,000 in dividends depends on the ETF's dividend yield. Currently, VIG has an average dividend yield of 1.7%. This means that for every $100 you invest in VIG, you will receive $1.70 in dividends each year. You would need to invest $58,824 in VIG to generate $1,000 in dividends. Another great dividend-paying ETF is the Schwab U.S. Dividend Equity ETF, ticker symbol SCHD. The fund seeks to track the performance of the Dow Jones U.S. Dividend 100 Index, which includes high dividend-paying U.S. companies with a track record of consistently paying dividends. This ETF has $27 billion in assets under management and an average 2.98% dividend yield. This means that for every $100 you invest in SCHD, you will receive $2.98 in dividends each year. You would need to invest $33,557 in SCHD to make $1,000 in dividends. The expense ratio is 0.06%, and the dividends are distributed quarterly. A third option, if you want an even higher dividend yield, is the iShares Core High Dividend ETF, ticker symbol HDV. This ETF tracks the investment results of the Morningstar Dividend Yield Focus Index. The index is composed of 75 U.S. stocks that have been screened for financial health and have a relatively high dividend yield. The ETF has $10.7 billion in assets under management with an expense ratio of 0.08%. The average dividend yield for HDV is 3.47%, which is a significant percentage. To make $1,000 in dividends with this ETF, you need to have $28,818 invested, a lot less than, for example, the Vanguard Dividend Appreciation ETF. The dividends are distributed quarterly. There are a lot more ETF options out there that may provide even higher dividend yields and may even have a lower expense ratio. The ones mentioned are just to show you some of the more popular options and their different use cases. However, it's important to remember that the dividend yield of an ETF can change over time. If the dividend yield of, for example, SCHD decreases, you will need to invest more money to generate the same amount of dividends. Also, it's important to remember that the price of these ETFs can go up or down. If the price of SCHD decreases, you will need to invest more shares to generate the same amount of dividends. So the amount of money you need to invest in SCHD to generate $1,000 in dividends will depend on the ETF's dividend yield and the price of the ETF. And by the way, if you've made it this far into the video, hopefully you're finding it helpful. Make sure to subscribe and leave a like on the video so you don't miss any of my future videos related to investing and finance. Another way to achieve your first $1,000 in dividends is by investing in individual stocks. Many stocks pay dividends, and some offer attractive dividend yields. A good place to start looking for these stocks can be the S&P 500 Dividend Aristocrats Index. The Dividend Aristocrats are a group of companies that have raised their dividend for many consecutive years, often 25 years in a row or more. These companies are usually large and stable companies that are often a part of the major stock market index, such as the S&P 500. These are safe options for people wanting to invest in dividend-paying stocks. A negative that's important to note is that these companies are often large and well-established, so the room for growth for these companies is usually not as big as for some smaller companies. So when looking at these companies, keep that in mind. Some examples of these dividend aristocrats are Coca-Cola, McDonald's, and Walmart. Coca-Cola has a long and uninterrupted history of dividend payments dating back to 1962. The company has increased its dividend every year for 59 consecutive years, making it one of the most reliable dividend payers in the world. The current quarterly dividend for Coca-Cola is 46 cents per share. This translates to an annual dividend of $1.84 per share. The dividend yield for Coca-Cola is currently 3%. As you can see, over the previous 59 years, Coca-Cola has increased its dividend by an average of 5.5% a year. This is a very impressive track record, and it is one of the reasons why Coca-Cola is considered to be a very safe investment. Coca-Cola is a terrific choice if you're searching for a company with a long track record of dividend payments and dividend increases. McDonald's has a long and impressive dividend history. The company has increased its dividend every year for 44 consecutive years, also making it one of the most reliable dividend payers in the world. The current quarterly dividend for McDonald's is $1.52 per share. This translates to an annual dividend of $6.08 per share. The dividend yield for McDonald's is currently 2.07%. As you can see, McDonald's has increased its dividend by an average of 4.5% per year over the past 44 years. This is a very impressive track record. Walmart, like Coca-Cola and McDonald's, has a long and successful dividend history. The company has increased its dividend every year for 49 consecutive years. Walmart's current quarterly dividend is 57 cents per share. This equates to a $2.28 annual dividend per share. The dividend yield for Walmart is currently 1.43%. Walmart has increased its dividend by an average of 3.5% per year over the past 49 years. This is a very solid track record, and it is one of the reasons why Walmart is considered to be a very safe investment. When investing in individual stocks, it is recommended to diversify your investments in many different companies and don't rely on one single company. Don't put all of your eggs in one basket. Lastly, we have real estate investment trusts, REITs. REITs are individual stocks but work a little different from the stocks mentioned earlier in the video. It is a company that owns, operates, or finances income-generating real estate properties. REITs allow individual investors to invest in real estate without directly owning physical properties. They pool investors' money to acquire and manage various types of real estate, such as commercial properties, office buildings, shopping malls, hotels, residential properties, apartment complexes, industrial facilities, or even infrastructure assets, cell towers, data centers. In return for investing in an REIT, investors receive dividends based on the rental income and profits generated by the properties owned by the REIT. By law, REITs are required to distribute a significant portion of their income as dividends to their shareholders, making them an attractive option for investors seeking regular income streams. Some examples of great REITs are Realty Income Corp., Simon Property Group, and Welltower. Realty Income Corp., ticker symbol O, owns, develops, and manages U.S. real estate with a focus on single-tenant buildings. Realty Income Corp. has a dividend yield of just under 5% at 4.97%. This company is also one of the 67 dividend aristocrats that we mentioned earlier in the video. Simon Property Group, ticker symbol SPG, specializes in regional malls, outlet centers, and community and lifestyle centers. The stock pays the highest dividend out of the three stocks with a dividend yield of 5.9%. Welltower, ticker symbol WELL, invests in healthcare facilities, including senior housing, specialty care facilities, and medical office buildings. WELL has a dividend yield of 3%. Make sure to subscribe and watch the other videos on the channel for more investing and finance-related content. See you soon.